Breaking news. Gold and silver just erased trillions of dollars in market value in less than half an hour. Prices are starting to bounce, but make no mistake, something huge just happened. Let's break it down. Thank you so much for watching. I truly appreciate it. Let's start with the flash crash we witnessed this morning. Watching it unfold in real time was unreal. Gold had topped out around $5,600 an ounce before plunging to roughly $5,100 in a matter of minutes. That's a $500 move in less than an hour. Silver experienced an even more violent swing. It was trading near $122 an ounce at the high, which still sounds insane to say out loud, before collapsing to around $106. That's roughly a $15 drop in about 30 minutes. One post on X summed it up perfectly. They said, "We just watched wealth equivalent to the combined GDP of the UK and France disappear faster than it takes to order a pizza." Moves like this aren't just rare, they're completely off the historical charts. So what actually happened? According to that same analysis, extreme events like this almost always come from market structure issues. Instant deleveraging, cascading margin calls, collateral evaporating, forced liquidations. In plain English, the system cracked. When so-called safe haven assets lose trillions in minutes, the market is screaming that we're living through a real paradigm shift. To be fair, this wasn't isolated to precious metals. Stocks were selling off hard at the same time. The Nasdaq and S&P both dropped sharply alongside gold and silver. Silver HQ weighed in, calling it the usual stairs up, elevator down, followed by a less polite comment suggesting some people should be in jail. Many are calling this a coordinated attack, but metals have already begun recovering. Former head of JP Morgan's metals desk, Robert Gottlieb, also weighed in. He said this was a long overdue correction after a powerful momentum run. He emphasized that when momentum markets correct, the moves can be brutal. As for the trigger, he said it could be higher rates, shifting government tone, seasonal positioning ahead of Lunar New Year, or simply an overcrowded trade needing air. His takeaway was simple. The reason matters less than the result. Corrections flush out weak hands, reset positioning, and often lay the groundwork for the next leg higher, assuming the core thesis remains intact. And in his view, it does. Global economic stress and geopolitical uncertainty aren't going anywhere. The real question now is whether this was just a dip or the first crack. Violent corrections don't end bull markets. Complacency does. Here's where things get truly wild. While silver was crashing in the West, it was ripping higher in China. Shanghai silver surged to nearly $150 an ounce in US dollar terms. The Shanghai premium exploded to over $40, while COMEX prices fell off a cliff. Let me repeat that. Silver was near $150 an ounce in China, while it briefly crashed to around $106 in the US. That level of arbitrage is almost impossible to comprehend. So the big question is this. Is China intentionally running silver prices hot to drain LBMA and COMEX vaults? When it comes to precious metals, China and Trump, there are no coincidences. This fits perfectly with what I've been saying for a long time. China is aggressively securing silver and locking it down. Last year, they changed the rules entirely, limiting silver exports to a small group of government-approved companies. Silver has been officially classified as critical to their industrial future. Now look at the physical market. Perth Mint and Metalor are no longer accepting new silver orders. Argor Heraeus and Nadir are facing severe delays, with deliveries pushed months out. Wholesale premiums are spiking anywhere from 100 to 200%. The Perth Mint halting new silver orders is especially alarming. This isn't even happening in the US. Physical supply is tightening fast. On top of that, COMEX and CME just raised margin requirements on silver, platinum, and palladium, but not gold. Silver margins jumped from 9% to 11%. Were they trying to force prices lower? It's certainly possible. Add in the Fed holding rates steady, which is traditionally bearish for metals, although rate cuts are still expected later this year. But honestly, Fed policy feels like small potatoes compared to everything else unfolding globally. Bottom line, today's flash crash doesn't change my outlook. This is not financial advice, just my opinion, but I remain extremely bullish on gold and silver. I still believe silver can run to at least $150 an ounce before the year is over. I've held that view even when silver was under 100. There may be excess silver sitting at some US refiners, but elsewhere in the world, supply is drying up fast. Australia isn't taking orders. China is bidding aggressively. Something massive is happening. We are in a metals war. And today felt like a warning shot. Silver could end the day higher. It could retest 120, or it could drop again. Volatility is here to stay. Markets are shifting minute by minute. So I'll ask you, where do you think gold and silver go from here? Drop your thoughts in the comments. Thanks again for watching, and I'll see you in the next one. Stay tuned to the Silver Thesis channel for more updates as they become available.